usually talk to Keith McCullough, the CEO of Research Edge, about the markets because he takes the macro view we like to talk about here at Bloomberg. However, Research Edge is a firm that Keith founded, he runs. It's an independent research firm, and there are more of these popping up all over Wall Street and off Wall Street, like Keith's firm these days. He's here this morning to talk about founding an independent research firm, running an independent research firm. And one reason for that is this. Keith, you're on the cover of the Bloomberg Markets magazine this month. You're one of the Research Renegades. Tell us a bit about the challenges of competing with Wall Street and why you got into that business in the first place after being with Carlyle as a hedge fund manager.
It's interesting. Competing with Wall Street's not that hard if you take the best of Wall Street. So we don't really have a problem with the people on Wall Street. What we had a problem with was the compromised and conflicted structure of Wall Street. So where we started was basically picking an all-star team of Wall Street. So it really is Wall Street in a different package, and one that I think is better for the client.
Well, what can they do for you at Research Edge that they weren't able to do, say, for Deutsche Bank or Morgan Stanley?
Yeah, it's a great point. And right now, what they can't do is really a function of what they made themselves, which is we call it the Berlin Wall. Asset management, investment banking, and sales and trading all in the same house, which basically means that you cannot make a real-time market call. And that's what the buy side does. They manage risk on a real-time basis. So what I've done is really narrowed the gap in terms of duration by which you can make calls. And making the call on Wall Street is what matters. So if you can make that real time, that's what you really need to do.
Was it hard to get maybe some of your former colleagues or some of the people you worked with to come and join you?
In the beginning, it was hard. That was the hardest part, but we're past that part. Now I feel like we have a tremendous amount of momentum, and really we can pick an all-star team of the analysts that are out there. We have a higher compensation structure. I think we have a more transparent compensation structure. Yeah, a piece of equity for some of our better players, so to speak, to use the metaphor. And we have some great players, and I'm happy. I was very happy to and humbled to have them join on that basis.
Do you feel Wall Street pushing back? You know, we've heard, and it's somewhat controversial, the trading huddles, for example, that Goldman Sachs conducts. They get their analysts on the phone with preferred clients and do some of what you're talking about now, which is make calls in real time without having to actually publish.
Right. I just think you need to be completely transparent and accountable about it. It happens. It happens. We know that. So let's just admit that it happens and put it in a structure by which the SEC approves and whatnot. I think that that's just the simple reality of it all. It happens, so put it in a non-compromised, non-conflicted structure whereby you can execute on it and admit that that's what you do.
Should there be a different pay structure? Let's just say if you were Lloyd Blankfein, I mean, could you offer this kind of research in real time to one group of investors and not another, but make it clear if this group of investors were paying for a premium service?
I think you could. I think that's where the business is going. At the end of the day, people want to manage risk real time. So if you can make a call that's real time, that's where we're going to go. So I feel like we're very early in terms of separating church and state, broker dealer versus the research house. What we've done is actually partnered with a broker dealer, with LeBranch, and I think that that's a much more palatable position to make a call on a daily basis.
Keith, how about credibility? You're a former hedge fund manager. The hedge fund that you were with, Blue Wave, run by Carlyle, blew up. How do you actually win credibility with the clients that you're going after who are so used to dealing with, again, the likes of Goldman, Citigroup, Bank of America, Merrill Lynch, whomever you want?
First, you build credibility with a great team. I mince no words. I have a fantastic team, and they have credibility. The second way that you build credibility is approaching it from the client's perspective. Having a blow up on the buy side or being wrong on the buy side or managing risk on the buy side is a completely different perspective than trying to sell your wares ahead of an IPO, secondary trading, or wherever it may be. You're really approaching the client on their terms, in their language, and really in a way that they'd like you to be, which is to be right.
As an independent, where do you see the next opportunity?
The next opportunity, again, is definitely separating church and state and taking that ability to both originate ideas and then see those ideas transfer across the capital structure, whether it be into banking deals with partners that do banking or private equity deals, LBOs, et cetera.
In about 45 seconds, we always like to talk to you about the dollar. Ben Bernanke out with some hawkish comments. Do you think that's going to turn things around for the dollar and maybe even for the equity markets?
Yeah, this morning was a critical move, and then Summers hammered it home. So you had back-to-back Treasury and the Fed really signal not an explicitly hawkish tone, but on the margin less dovish. And as you know, everything that matters in macro happens on the margin.
Keith, thank you as always for joining us.
And we like the red tie on the cover, most importantly.
Keith's on the cover of Bloomberg Markets magazine this month. Pick up a copy and have a read of Research Renegades. He is the CEO of Research Edge, joining us here this morning.